The difference between a losing trader and a consistent winning trader with regular sniper entries lies in what I am about to show you in this video. Watch till the end because every section of it carries an important information, and skipping any part might lead to missing vital informations that makes the strategy and the system works. Hello traders, welcome back to Finspoke channel, where we break down the world of trading, money and mindset into simple practical lessons. And if you are serious about winning financially, you are in the right place. Welcome to the family. Smash that subscribe button, hit the bell icon beside it, like this video, and don't forget to leave a comment below. Let's get into it. Trading without a top-down analysis is like walking in a thick darkness without enough light. I'm going to walk you through the ultimate guide to top-down analysis. And I'm going to do this by combining what I call workable concepts that I use to trade in this space. It doesn't matter whether you are trading crypto, forex, or stock. Chart is chart, analysis is analysis. Get the information, get the knowledge, you will use it anywhere. Now, I'm going to use price action plus smart money concepts in case you've not come across the strategy called smart money concept. Just pay attention, it's not difficult, you pick it. Now, this, I call it system. It looks into market structure, supply and the demand zone, liquidity zone, then identifying trade opportunities. Before we dive in deeply, what is top-down analysis? Simply put, it's an analysis technique that combines multiple time frame and market factors to gain deep insights of the market condition per time. What this means is that we analyze the market from the higher time frame down to the medium time frame and cap it up with the lower time frame in order to get a clearer view of the market at all levels before entering a trade. We have three segments of time frame in the market. First is the higher time frame, second is the medium time frame, and the third is the lower time frame. Now, each of them has its own use cases. Now, the higher time frame starts from weekly to daily to 4 hours and to 1 hour. Mostly used by swing traders. So this particular time frame gives a directional bias. Here, what you do is to find out where the market is going. It gives you a bigger picture of the direction. Then the second segment is the medium time frame, and is mostly for day traders, where they start from 4 hours down to 1 hour to 30 minutes to 15 minutes. Mostly for day traders. But within this context, we mostly look for setups and the formation, refining opportunities from the higher time frame. Opportunities that we got from the higher time frame, we came down to this middle time frame and refined them and also identify other trading ranges we are going to be trading from. That's what we do in the medium time frame. Then the next one, or the last segment there, is the lower time frame. Lower time frame is mostly used by scalpers, where they start from 1 hour to 30 minutes to 15 minutes and also to 5 minutes. Now, this is a level where we come down for confirmation and applying our entry models, getting entries, stop loss, and also set targets. We do all of this at the lower time frame. Now, the point I want you to pick here is this. Whether you are a swing trader, day trader, or a scalper, if you start your analysis from the weekly down to the daily and start coming down, you will have a clearer overview of the market, and whatever direction you meet at any time frame, you will be able to interpret the informations confidently. There's something I also want you to note, and we call it, that is time frame relevancy. It's very important. What I mean here is that when you are pairing time frame, do it logically. It is very wrong to jump from the daily time frame down to 15 minutes. I mean, the gap is too much. You won't be able to capture or have clarity of what the price is doing on those time frames that you jumped. So it is more advisable to move from weekly to daily, from daily to 4 hours, from 4 hours to 1 hour, and from 1 hour you can talk of 30 minutes, 15 minutes, 5 minutes, and all. Why I said this is because you could see a bearish market at the daily time frame and totally a different thing at the 15 minutes time frame. So pair them logically. Pair your time frame logically. Before you start asking me why must I combine multiple time frame in my analysis, I am going to give you 3 reasons why you should do that. Number 1, you should do this to overcome what I call directional confusion. Whenever you are confused about the direction of the market, just know that you are focusing on the wrong time frame. The bigger directional picture helps you to take more confident entries. Please, if you are gaining value in this video and you have not subscribed to this channel, kindly subscribe, like this video, and leave a comment below. And don't forget to share. Keep watching. I will teach you what exactly to look for in each of these time frame to make an educated analysis in your chart easily, and they come up with an informed decisions. Now, reason number 2 is increasing accuracy. You need to incorporate these multiple time frames in order to increase your accuracy. Now, see this, a minor reaction in the higher time frame key level can appear as a significant move or structure on the lower time frame. So before placing any trade, it's important to check how much room price has before tapping into higher time frame supply and demand zone to avoid getting caught in a reversal. And reason number 3 is to optimize your optimizing trade entries. It doesn't matter whether you are trading crypto, forex, or you are using traditional chart pattern, trend line, support and resistance, demand and supply, liquidity, or price action. Top-down analysis is key if you really want to get sniper entry or high probability setup. Now, before we dive in deeply into the chart, let me refresh your mind. Like I mentioned earlier, we look at the market structure inside the chart. We also look at this liquidity. These are the things that we look at inside this top-down analysis. Now, we still remember that when we open our chart, first of all, we need to identify the direction of the market. And this is what we are looking at. When the market is printing high, more of highs, we say that we consider the market as uptrend. That is where we have the higher high and the higher low and the higher high and the higher low, provided that the previous high or the low has not been broken and the market didn't give us chalk to show that there could be possible reversal. So we consider this as an uptrend, and here the market is printing lower high, lower low, lower high, lower low, telling us that the movement is downwards. So in this, we look for a break. Either it's an uptrend, we look for a break of structure. And if it's a downtrend, we also look for a break of structure. These are the things we look out for in the market. Now, coming down here, this is liquidity. This might also be a different video of itself because we still have, I'm not diving deep into this liquidity and all of that because we also have the trend line liquidity. But this one is for support and resistance, where we have equal highs and equal lows. Equal highs and equal lows. You normally find this mostly around the support and resistance level. Now, what am I looking out for when I see this? I am looking out for it to be taken out. These are areas where we have a lot of orders packed. At the resistance level, we have a lot of sell orders lined or queued up here. So I expect if the market is moving downtrend, I expect the market to take out this liquidity before pushing down. And if it is at the support level, I also expect the market to take out this liquidity before going up. That is why you can scam in the market. You see something like this. You see something like this, and the market will push up like this, do something like this somehow, and come like this and pushed down. And in some cases, the market will also come, give you a structure like this, come down here. For people that placed a buy sale here, looking for continuation, so the market will just come here. So the market will just come down here, do something like this, move up and pushed down. So always look left. So when this is done, you know that the markets are taking out the liquidities that are being packed here and here. Give you a momentum candle and push. And the same thing is also applicable here when it wants to clear liquidity at the support level. The market will just come down like this, break this support level, clear whatever that is here, come back here, clear whatever that is here, move back like this before pushing. Mostly, these are institutional buys, institutional movement, the big boss in the market. Now we are the weekly time frame, and what we want to do in this time frame is to build bias and identify potential market direction. Like we want to find out where the market is likely to go, at least between 1 to 3 weeks. We have a structure here. I am trying to focus here because this is where the current price is within this range. We have another one here. We have one here. We also have one here. These are actually areas we can find trading opportunities. We have structures here. I wouldn't want to go into details because I don't want this video to be that long. Price was rejected here and there was a retest. So I'm going to take this as an extreme supply zone. An extreme supply zone. The price will still return to this place, but then it has to do some other assignments down before coming down to this supply zone again. So the daily time frame is actually aligning with the weekly time frame. There is nothing much to do here. Looking at this chart, I don't want to do refining here. There are some charts that you open and you still need to do some refining, or you still need to mark some zones at the daily time frame. But for now, this chart is clean. This is a supply zone, the current supply zone that was retested. It was retested before pushing down. So let's quickly head over to the 4 hours time frame. At this 4 hours time frame, what we'll do more is to refine these zones. They possibly find other smaller trading opportunities. Now looking at this, you can see that this is making lower highs and lower lows. This is downtrend, and we are going to look for a sell opportunities. So what we are going to do here is to just do a little refining. Already the market or the price is shooting down already, but I saw an area of interest here which I want to explain. If you look at this market coming, the price that is coming down, the price is coming down to fill this place. Please follow me. Now, this is what we call inefficiency in the market. It's an inefficiency, or you call it fair value gap, or you call it imbalance. Any of these word that you use, that is correct. Now, it is imbalance or fair value gap or inefficiency because there are open prices here. It's an open price. The market or the price pushed up with speed and left this place open. Price is here open. So when it got to this place, it was rejected. It tried to consolidate and it was also rejected. It started coming down to come and fill this imbalance. That is what it's doing. Now, this is what is likely going to play out. This price will come here It will come here at this level to still come like this, come here, and they push up again to this supply zone. That's the scenario. It can also come here. It's a mid support zone, sort of. Clear this liquidity here before going up, or clear the liquidity here, clear the ones here, and start pushing down, meaning that it can still do like this, do like this, do like this, come like this, come like this, before coming to feel this imbalance here. This is the situation of this market currently. But then there is something I want you to also have at the back of your mind. This is crypto asset. This is SUI USDT. So you are going to watch the movement of Bitcoin and Ethereum, because the movement of Bitcoin, if Bitcoin is pumping, the tendency of this as a price not coming to feel this imbalance immediately is always there. It will feel the imbalance, but might not really be immediately. That's what I'm trying to say. So let me not confuse you. So, but why trading crypto? You also look out for Bitcoin and Ethereum, what they are doing, because that is somehow what determines the movement of altcoin. So what we are going to do, or what I am expected to do here, since I've found a trading opportunity here, is to actually wait for this trade to range and get to this zone. So once it gets to this zone, that is where the confirmation comes in. Once it gets to this zone, I will watch to see it take out this liquidity here. There's a liquidity here. Take out the liquidity here. Then I will now know that the market is ready to move. I will go to the lower time frame to find my entry. So you can see that the market is still making lower lows. It's coming down to feel this to complete feeling this imbalance, and they probably retest this demand zone and the push up. So all we are going to do here is to wait. Let it fill this gap. Then we now wait to see what the market is going to do. If Bitcoin pushed up, definitely price will reverse and push up here, because it's the leading coin. But if it didn't, the market will still range here, probably come here to take off this liquidity. These are equal lows. Please, whenever you come across these equal lows and equal highs, always be patient and wait for the market to take it out, so that you don't get trapped and see the direction of the market before you take position. So this is what we are likely going to have. So when the market takes out this liquidity, push, and they start coming down, we are waiting for the market to feel this imbalance here. The same imbalance I mentioned here, we have it here as well. That's inefficiency in the market. These are open prices that need to be filled. So you be patient. So if you refine this, if you want to buy from this demand zone, this is actually a good setup. If you get a trade from here, this is a good setup, but you need patience to wait for this market to come to this zone before reversing. That is one. Secondly, you can take a trade here if price comes, take out this liquidity here to push down. You can take a short position. You can take a short position down to this zone. You can take a short position. Okay, so that is it. The price is moving down already, so this is not even a headache chart. Then if the price comes to retest this mid demand zone to push up, you also still need to get a confirmation that it is ready to move from the lower time frame. And if it is, you are going to take a trade from this zone too. You take a long position. And target this supply zone. So you see that we actually identify two opportunities from this 1 hour time frame. But then we need to be patient. As the market is moving down, it is also taking out liquidities that is in a trend form. People that are using trend lines understand what I'm saying here. So you wait for it to fill this imbalance. You get a confirmation from 15 minutes and from 5 minutes before you take the trade. What we did here in summary is to look at the weekly time frame. We are able to form a bias and see opportunities. Then we bring it down to the daily time frame, which is in alignment with the weekly time frame, and we move over to the 4 hours time frame. When we come down to the 4 hours time frame, we also discover that the trade or the price needed to do some movements in order to complete to fill in inefficiencies before it will start pushing up again from this mid demand zone. Depending on other factors, it will also come here, take out this equal lows and still move down. So most cases, I always say, look left to see what is going on previously. Now, if you are trading forex, it is advisable that when you have a setup like this, ensure it aligns within the New York session and the London session. The London and the New York session, when we have movements in the market. This kind of setup might not really play out good or well in the Asian session. That's why I am saying making this recommendation is better you trade it look for it in a London and a New York session. That's where you get the most of it. Another thing to observe here is if you overlook this higher time frame, you might also be missing some vital informations or insights that will help you in taking position. Now, when trading, is also good or wise for you to fathom macroeconomics into your trading. Just like as I mentioned Bitcoin, look at the market sentiment, look at what the fundamental analysis, what is happening within the economy. So these are the things you also need to look at, because sometimes when you find this kind of trade, you need to hold. Hold means the trade might not, end up within 1 day or 2 days for you to get the maximum results. Now, let me say this. Before using any setup with your real account, please backtest it on different assets or different pays, as the case may be, with demo accounts to evaluate that trading strategies, the performance. You need to use historical data, that is these charts. You need to use this and do the back testing to see how it plays out. Okay. The back testing will allow you to build the required confidence needed and prepare you for potential risk associated with with the particular strategy that you are using. That is what backtesting helps you to do. And trying it out for in your demo, that is where demo is important. Like I normally say, if it is to use demo to learn trading, it's not necessary. But if it is to use it to backtest, to try a strategy that you have backtested first, that is where demo is what important. When you backtest it using the historical data and your demo, it will help you to refine what needs to be refining, fine-tune the parameters, and come out a winning trader. Also understand that more trades doesn't mean more profit. I prefer to follow and monitor a trade, get a sniper entry, and a high probability win trade than to take many trades and come out with nothing. If you have gained value in this video, kindly smash that subscribe button if you've not done so. Hit the bell icon. Leave a comment below so the algorithm will know that we are actually doing something in this space. And don't forget to like this video. Share it to every struggling trader. You are helping someone when you do. Thank you for watching, and I will see you in my next video.